All right, well, today we have a special treat. We have Candice Corley, call her own, from Paradise, coming in to talk about how our strategy has changed her world. And from the background there, it looks like you're having some good changes, Candice.
Yes, I am. I'm enjoying it quite a bit. It has changed my world, and I am excited.
All right, so a little bit of background. Candice and I actually worked together a long time ago in a different life, it seems like. But out of the blue one day, you get a visit from an old friend, and he's got a strange strategy to share with you, different from maybe anything you'd heard before. Tell us a little bit about that.
Yes, well, he's got a strategy about when you've got a good cash flow type of income, what to do with that cash flow income to be able to put it to place to help with the tax ramifications of everything, as well as to be able to have it there not only for the end of your life, but have it there for the duration of your life with easy access as well.
Very important point. See, a lot of people think that this is about life insurance. This is about the traditional life insurance need, but that really wasn't what we were talking about at all, was it?
No.
It just happens to work real well when you have a family and kids and live in a pretty high tax environment. But so we had our conversation, and at the time you were really focused on real estate investing, right?
That's correct. I still am, and it still is a great product that I have. It still serves me very well.
Yeah, we get a lot of real estate investors, and I think a lot of times people think, or they tend to think that if I do this, I can't do that, and it's one or the other. You've actually found a way to dovetail those two strategies in your world to help you, and look at where you sit now. Tell us about that.
Yes, well, I definitely had some of those nerves. I thought that same idea. If I do one thing, I can't do the other. I've got to have enough cash to be able to do one side, and I can't do the other. But that is definitely not true. The best thing I found about it is that I was able to put those two things together and take the cash when I need it to buy those good investments. And then when those investments sell, I can then pay off the loan that I took out of the investment. So that's been a great thing to be able to have the flexibility to get those good deals when they become available.
Sure. So you have had an opportunity to build equity in two different places: real estate and in your insurance strategy. Compare,
Correct.
compare and contrast the two for us. So if you were to need money today, where would you be more likely to be able to get the money?
Sure, they are definitely two great strategies, but they are very different. The real estate strategy is one where I'm going to buy low. I'm probably found a great deal. I need to get the money quickly in order to get the deal. And then that's usually something that I'm looking to put money into to raise the value in order to sell it on the back end. It's usually a short time frame in there for that. However, it's not always easy to get that money for those purchases in a timely fashion from your typical bank lender who has to go through an underwriting process. The good thing about this particular product is I'm able to have my money within 5 to 7 days, less than a week for sure. It's in my bank account, and I'm able to then use it, and then I'm able to pay it back when that property sells, or when it fits me best. It goes back and I'm able to pay it when it is convenient.
So, guys, here's what's happening. Candice is building private collateral inside of her policy that she doesn't need anybody's permission to get to. You don't have to do a credit application. There's no underwriting. Nobody's asking you questions about what you need the money for. There's no big long delay in the process. It's a phone call. Send me money. And that's really what I want to drive home for people is money inside of your private collateral policy is very easily available, and it's some of the easiest sources of money for an entrepreneur like yourself, an investor, somebody who has to make quick decisions on what to buy, when to sell. But it's because you have that private collateral now that you're able to basically finance your own real estate ventures as you see fit. You actually created your own family bank. You didn't start out that way. Do you remember the early years? I remember.
Yes, I was those early years. It scared me at first, but you definitely walked me through it. You showed me a way that it would make sense. And you told me the plan that if I were to invest X amount of dollars apart from my regular earnings over the next years and years and years, then that will be compounded. And eventually it's something quicker. And I could get those dividends returning quicker, the equity quicker, so that I would be able to pull it out later as I had those opportunities come through.
You had these opportunities available to you because you did the tough things up front. You did the saving. You battled through those years where maybe you weren't completely sure. Maybe you didn't have the big vision at the time. But you followed through and you did those difficult things. So now you've kind of crossed that hurdle and you're watching your collateral grow. And you're seeing that each and every year you're able to take on bigger, better projects to make other rates of return. See, we like to stack rates of return. You're getting a rate of return inside of your insurance portfolio, but you're also able to take that money and go create other rates of return that you can stack. And that's where it becomes magic. So I know you didn't have that at the beginning, and now you're starting to cross that hurdle. What does it feel like now as you're watching your collateral grow?
It's liberating. I mean, I chose to go into doing real estate and doing property management and investments because it was liberating, because I enjoyed the freedom of self-employment. This would be the perfect supplement of a program to go along with anyone who is in real estate, who has the freedom of their earnings and who wants to be able to put their extra cash in a place where they don't have to worry about it being taxed. They can store it away and not worry as much about when they may have it on the good years. They've got a place to put it away for when they've got years that maybe are.
Bear with us, people. Candice is in paradise, but unfortunately, paradise doesn't come with high-speed internet very well. But she just
No, not yet.
dropped
Not
another
yet.
quarter in the meter, and we're back off and running. So you were describing that feeling when you were first kind of nervous, didn't have the big picture, and you were writing big checks. This is money that you were saving for your future. Then you started to see the crossover where all of a sudden you're watching your collateral grow and you're starting to actually fund projects out of your own private bank.
Yes.
Tell us a little
Yes.
bit about that.
Well, it is great for someone who does have, if you are able to start the race and you're running at a great pace and you're having that income, this is the place that you want to start, because you do want to start with momentum. The greatest thing with this is the momentum. If you can start with the momentum and you can get going in the first 5, 6 years, after that, you will be able to feel what a great pace you are running at. At this point, I've been feeding this fund for quite some time, and I've been able to finally pull the money out and be able to go ahead, be able to pull the money out and go ahead and purchase something like this that I found here, which is a great deal outside of the U.S., or other good real estate deals that are there in the U.S. as well.
That's awesome. And, we talk about where you store your equity, where you store your treasure, and where your money is actually more important than what it can earn. And that's something that is a very difficult concept to get across until you start to learn and live in it. So you're in a place right now where your money is growing and the government doesn't touch it. The government actually really doesn't even know about it.
Correct.
So if you were to continue this and carry this forward, when you fully pay out and build your bank, all of your wealth is going to be off the radar screen of the IRS's income tax monster.
Yes.
So I think part of being in this tribe is understanding that we believe taxes are going to go up, and they're going to go up a lot. And where your money is going to determine what your experience is. So if it's ease of money, if it's safety of money, you made a statement earlier where you said, I write that check and it gives me a sense of security.
Correct.
That's another one that's kind of hard to describe or put a price tag on. Flesh that out for me. Unpack the security that you feel.
Yes, normally people write the check and it's something that's a scary thing. People have buyer's remorse when you buy a house, you get scared about what you're buying. The good thing is, I know when I'm writing the check, it's a benefit to me because it's going to be helpful with my taxes for that year. But it's also a security feature for me because I know that that money is going into a safe place that is building equity and that can't be touched by any creditors. If for some reason, God forbid, I did have some sort of issue where someone was coming after me, they wouldn't be able to touch it. I'm told by Mark that it is in a safe place. So that's another thing, that it's got great peace of mind.
Yeah, creditor protection is something we don't talk about an awful lot, but boy, for an entrepreneur, for a professional, for somebody who already has risk in their everyday lives, the idea that your money is no longer accessible to creditors becomes a very big deal, because if that money was sitting in your bank account and you ran into a problem with a creditor, they've got public record of what money you have and it's available to them. Inside your policy, they have no public record. That's why we call this private collateral. When I say private collateral, I'm referring to the fact that there are no IRS forms generated from a life insurance policy, an IRA, 401k. Those all produce what's called 1099s. That's the tattletale form that the companies use to report income to the IRS. So if nobody reports income to the IRS on your behalf, we're going to make you look poor to the government.
Yes.
I've actually had people say, I'm going to drive my Bentley down to the place to pick up my check and get all of my benefits, because it really is the way
Yes.
the way the government systems are designed is they're all based off of your tax return. So they judge your wealth by the amount of taxes that you pay. So if your money is in a place that doesn't require taxes, no 1099, private.
Great advantage.
And that's attractive to a lot of people, because I can pull up a company's 401k plan and I can come up with all kinds of information about that. But for our clients, we're building private collateral in a family bank. And this is where the rubber meets the road on confiscation. Because when we talk about real estate, when we talk about 401ks, the IRAs, the stock market, any of these complex transactions, people have to understand that whenever there's a financial transaction, somebody's getting paid. And it usually is coming out of your pocket, whether you know it or not. And that's really why we have built a focus around the confiscation of people's money. Because if you're over here trying to build it and grow it and pour it away into your bucket, but your bucket has a hole in it, the answer is not to add money to the bucket faster. The answer is to plug the hole. And that's really where I think you're going to see so many benefits in your future as this continues to grow. Each year, there are no down years. And we talk about the number one rule of money. And this one's simple: don't lose money. The stock market has down years. Real estate has down years. Your private bank has no down years.
Correct.
It's the only place we can guarantee that kind of freedom. So really, this is not about life insurance. This is really about taxes and the financial system and who's taking money from who. So we've actually found a way to take money for your future, build private collateral from it, and spend other people's money while yours grows. That's the beauty. That's the beauty. And that's why you're sitting in El Salvador,
Yes.
in paradise, talking to poor old me up here in Michigan. Sounds like it's working well for you. What would you tell somebody out there who thinks maybe this isn't for me? I get life insurance, but I really don't need life insurance. My kids are grown. You know, I hear that a lot from the people in my market. My primary market is people within 10 years of retirement in either direction. You're off of that profile, right? You're a bit younger than that, but yet this really appealed to you. What would you tell someone who's nervous to start?
I was very nervous to start, so I fully can understand the thought of writing that check, which is what I thought of as putting in my savings account, but writing that check to this program was a little bit scarier because it wasn't something that was familiar to me. It wasn't something that I was used to. However, it's been several years now. I would say we're going probably 8+ years on this program, and I've seen the benefits already. It was a little hard to write that check at first. I maybe even had to scrape together, money from different places a couple times at the beginning. And I talked to Mark and I said, I'm nervous. He said, please, this is great. We need to do the funding at the beginning. See what you can do what you can. If you can't, we'll work on something. But I was able to find it. And now I'm through that tough spot. Now I'm to a point where not only is it easy to continue to write the funding, but there's enough equity being built each year that it makes that growth exponential.
Yeah, and I'm glad you bring that up, because this is not a get rich quick scheme. This is not a fad kind of a program, right? This is the kind of thing that the Rockefellers have been doing for centuries. This is the kind of thing that J.C. Penney launched his company from a cash value loan against his own policy. Walt Disney founded Disney from a loan from his policy. This is something that wealthy families have been doing forever, but they didn't share that information with you. They didn't share it with me. I had to find out the hard way, which is why I'm having so much fun bringing this message out to everybody, because you can do it. The comma might be in a different place. We are all in different boats, but we face the same storm. This is not a get rich quick. When you're starting a business, typically there's always a few years where you're in the red, right? You're starting to get up and running. You're not making money yet. You're not profitable. But when you cross over and you're in the black, magic happens. And for this strategy, when you cross that hurdle and you begin to see the tremendous growth of your cash and your collateral, it gets better every year. There's no other place like it. So it's really not anything to do with life insurance itself. It's about the financial system, how things work, and the fact that where your money is probably the most important thing. So I hear people, typically in that retirement red zone. So their retirement date plus or minus 10 years. Those are the years that you have to really make sure that every decision you make matters. We can make mistakes when we're young. We all do. But we don't get a lot of do-overs in retirement. Once you're no longer working and it's your assets that are taking care of you, all of the decisions you made in the past are going to come home. And do you like what it has created for you, or do you not? And that's where, this is a conversation that is typically held with these retirees, but here you're in your 20s when we were having this talk.
Yes.
And I think it's that achiever gene in you that I'm trying to pinpoint, but it's that go-getter, that achiever, that, you're not a 9-to-5er, you're not a jobber. You're out there to be successful. And that's really who we're communicating with. It's that achiever, that driver that wants that 6-figure retirement.
It's like the other side of your name, the foresight for financial. You've got to have the foresight so that you can have the hindsight. If you have the foresight to sign on, then you can have that hindsight that you'll be very happy with later.
Boy. And Candice was not paid to say that, folks. That just came right out. All right, so another great point, but I'm curious, what would you tell yourself, your 5 years ago self, if you had an opportunity to sit down with yourself, what would you tell yourself?
Well, I think I know that my goals in the past were a little different. I used to think that I wanted to look at the number. I wanted to look at that balance sheet. And each month when I got my bank statement, I wanted to see that it grew. I wanted to see I had a little bit of growth, whatever little bit that may be, as long as the number was higher than the last month. Now I do realize that money can be put to a separate place to have even further exponential growth. Just putting it in a savings account is not going to do nearly as much as being able to put it to a place and a specific program in mind that has the safety factor there, the growth factor there, as well as the tax benefit factor there for the future. But I definitely Used to like to watch the savings account numbers go up. I do get dividend statements, so I mean you can see it still go up by that way, but it's different.
So I think a lot of times we can really get caught up and wrapped around the axle in words, in how we mean certain words. We use words like investing. We use words like saving. And are they different? And I know our industry is very sensitive about using the term investment when it refers to a life insurance contract. So whether it's an investment, whether it's a savings vehicle, we've all learned that cash flow is king. Would you agree with that statement?
Absolutely.
Cash flow is king. So if we're able to take our cash flow, route it through a policy that's properly designed, then that allows us to build collateral and take all of the tax benefits while still using that money to go do other things with it. So are we referring to investing? Are we referring to savings? What are we referring to? And I think people get too caught up in those words. You have an opportunity to save money into an account that will grow your wealth, but at the same time use that money to go pursue other investments. And I think that is the clarity that I'm trying to bring to everybody. What can this do for you? If you only had your private pool of collateral to draw on with nobody's permission, paying nobody a fee to manage it, and paying no taxes to the IRS to use it, I'm not sure what we call it matters. If it does all of those things, then we want it.
I would agree. Yes. Whole.
Yeah, I think a lot of times people have to take a step back when they discover that life insurance comes into play here. So we're simply using the life insurance company for our advantage, which is kind of a new thing because typically we're the pawns in the game. But now we have the opportunity to build our wealth off the radar screen of the IRS. And if the stock market is having a rough day, boy, that might be a great opportunity for us to move money from our policy to the stock market. I see that as a very different approach than living in the stock market, riding its ups and downs and hoping everything works out. I prefer to stand safe and dry on the shore and watch for those ebb tides that go out so that I can jump in at the right time. I call that investing. Anything else kind of strikes me as a casino. And I always tell people, if your life savings is in the market and you don't understand what you own, why you own it, what you paid for it, and how to live off of it, I think you're gambling. And I think for most people, that's the name of the game that they're playing. You know, maybe I don't have enough savings built up. Maybe the stock market will save me. You know, maybe I'll hit that right investment and it'll fix all of the problems that I've ever had with saving money. And the reason this is working so well for you is that you were a good saver to begin with. And that's absolutely critical, because this is not a get rich quick scheme, but it's also not a keep you from being poor scheme. You have to already have the right money habits. And maybe there were things in the past where you were putting your money, but now that you've kind of discovered what we've shown you.
Well, you can't spend more than you make. Ever. You can't spend more than you make. Let's start with that simple fact, and then you can build upon it.
So act your wage is kind of what you're saying there.
Exactly.
Yes. So can you think of any examples of things that you used to spend money on, or things that you used to invest in or save in, that you've kind of replaced in favor of building your own private bank?
I mean, you kind of mentioned one, the casino. I sure like to go in there, but that did never come out with anything good. This is definitely a better place for it. But, you know, other than that, I really have enjoyed putting my money in the real estate market. That can always be an up or down as well. This is a safe place to put it, and I'm happy with putting it here.
Wonderful. All right. Anything else that you would tell somebody who's hesitant, holding back, maybe thinks it's not for them? I don't need life insurance. This is crazy. Why are we talking about this? What would you tell those folks?
I would tell them to consider if they have an extra small amount. If they're putting a small amount into a savings account, if they are putting it aside to go to the casino, to whatever it is, if they can put that money aside right off the top and gather it together, it would be better spent in the long run. You don't have to do anything big. You can start off small, but it's something that you can add to, and it does give yourself a lot of flexibility once you're able to move forward in time to the future.
Yeah, we always talk about, and when I was little, I always remember hearing my mom tell me, you have to pay your dues. And I don't even know if I hear that phrase very much anymore, but it's a concept that rings true with me. And anything in life that's good, you kind of have to work your way up. You have to work your way through the difficult parts so that you can enjoy the benefits later. And I think we're starting to see people who aren't willing to do those things. They expect immediate results. They expect immediate success. And if they don't get it, they get kind of turned off. This is a long run marathon race. This is not a habit that you're going to just cultivate and develop. This is something that you have to make a lifestyle choice. I compare this to quick fad diets versus healthy living.
Yes.
If you're
Yes.
looking for a quick fad diet to fix a short-term problem, change the channel. This is not it. If you're looking to make a positive move in your life to live a healthy financial lifestyle and to keep the confiscation out of your backyard, this is the best I've discovered yet. You used a word earlier that I really want to key on, and you said it gives you a sense of security.
Yes.
So I'm going to say from my own perspective, each month when I write a check into my policy, it's my favorite check to write, and it wasn't always that way. But here's why it's my favorite check to write. I know I'm writing a check that's going to my future, my family's future, and I know that the check that I write is never going to go down in value inside of my account. That's not the experience I ever had with an IRA, a 401k, a piece of real estate. I've lost in all of those. So when you talk about that security, in your words, how do you feel when you make a contribution to your future? Some call it writing a check for a premium. I call it making a contribution to your future. Tell me about that security.
It is more the contribution to your future. When I, wrote a check to my savings account, that was a similar feeling. I had a good feeling because I wrote it to my savings, but because I am writing a large check that is a contribution to my future that I know will evolve, that check that I'm writing won't just be X amount of dollars as I'm writing it. It's going to be built upon. So not only can I feel good about it because it's going to be saved and tucked away and safekeeping from a bunch of other things, but it's going to grow and I'm going to have it there later. So it is a safety feeling and it does make me feel good. It's not something that I'm nervous about what's going to happen, if it's going to go up or down. It's a check that I know is going to not only be there for me later, but it's going to have money that's already built from it.
Absolutely. Awesome points. And that it's kind of hard to put a price tag on that feeling of, you just feel like it's handled. It's good. That's a good feeling. So let's kind of put a bow on this and summarize at the 40,000 foot level. We had a conversation when you were a 20-something real estate investor, surrounded by real estate investors, surrounded by people who day traded in the stock market. And here comes Mark talking about, let's fund some boring old whole life insurance. What a difference. What a difference to see you now, years later, reaping the benefits because you paid those dues. Now you have things that few other people have. And it's all because you were willing to do things that few other people are willing to do. I'm so happy and proud of you for what you've done. To kind of summarize how you're using this overall strategy. During your working years, right now, you're running around chasing every project, every opportunity. If you were working in a typical model where your savings are all sitting in your 401k, and you can't touch it till you're 60, these other projects that you're doing, you would be funding those from other sources, other people's money, and paying an arm's length for it. During your working years, you're able to take these loans, these advances, these collateral advances, and go do projects that you wanted to fund in the first place. Now, are you going to pay your loans back?
Perhaps, probably. I sure hope so. I hope I'm able to.
Yeah. So any collateral that you've advanced in your working years, you pay them back just like you would pay any other bank back, except it's going into your account, not to theirs. When you reach retirement and it's time to hang it up and never work again, I don't know if you'll ever have that day, but if you did, now we have all of our collateral because we've paid back our loans all throughout our working years. We've used our retirement money instead of sitting and watching it. We've used it to compound, stack rates of return in other areas of your life. But now all of your collateral is in one place and it's ready for you. In retirement,
Yeah.
now you're taking those advances and you're never going to pay those back. Those are going to be paid back after you're gone. It's
Right.
brilliance. It's brilliance. I'm happy
It
for
is.
you.
It's, I appreciate that you shared this with me so many years ago and got me started at this point to start compounding it so early.
That's what hindsight's all about. I love it. Candice, thank you for joining us today. I really appreciate you being our client, our friend, a part of our tribe. And I look forward to big things coming from you. And I just can't say it enough. Thank you. I value you and I respect you.
Yeah, welcome, and you. Thank you, Mark.